Assalamualaikum and hello everyone. Welcome to our podcast Sembang Career. My name is Nuratipa binti Samsuri and I will be your host for today's episode. Before we begin, let me introduce our guests. Joining me today are my group members. First, we have Takib, Nurin, and also the last but not least, we have Haziq. Welcome everyone. Thank you all for joining me today. In this episode, we will be discussing risk tolerance, an important concept in financial planning and investment decision making. Have you ever wondered why some people are willing to invest in higher risk assets while people prefer safer investment options? Although everyone hopes to earn a good returns, not everyone is comfortable taking the same level of risk. That's why understanding risk tolerance is so important. So, to start our discussion, Takib, can you explain what risk tolerance actually means?
So thank you, Atipa. Risk tolerance refers to an individual's ability and willingness to accept potential losses when making investment decisions. In other words, it describes how comfortable a person is with the possibility of losing money in exchange for higher potential returns. Everyone has a different level of risk tolerance. Some people are comfortable taking bigger risks, while others prefer safer investments that offer more stable returns. Understanding your risk tolerance is important because it helps you choose investment that match your financial goals and personal comfort level.
Alright, thank you, Takib. That was a very clear and insightful explanation. As we have just learned, risk tolerance differs from person to person. Some investors are willing to take greater risks for potentially higher rewards, while others prefer a safer, more stable approach. With that in mind, let's take a closer look at the different categories of risk tolerance. Alright, Nurin, are there different type of risk tolerance?
Yes, there are generally three categories. The first is conservative risk tolerance. Conservative investors prefer low risk investments because their main priority is protecting their capital. Examples include fixed deposits and government bonds. The second category is moderate risk tolerance. Moderate investors are willing to take some risk in order to achieve higher returns, but they still want a balance between risk and security. The third category is aggressive risk tolerance. Aggressive investors are comfortable with high levels of risk and market volatility because they are aiming for potentially high returns over the long term.
That's very interesting. As we can see, individuals respond to risk in different ways depending on their circumstances and preferences. This naturally leads us to another important question: what influences a person's level of risk tolerance? Right, Haziq? What factors influence a person's risk tolerance?
Well, there are several factors. So the first one is age. Younger individuals such as students, they have higher risk tolerance because they have more time to recover from losses. And the second factor is financial condition. So people with stable income and sufficient savings, they are more likely comfortable taking investment and risk. The third factor is investment knowledge and experience. So someone who is experienced in the financial market, they are more confident when facing market uncertainty. The fourth factor is personality. So some people just naturally enjoy taking more risks, while others prefer more stability and certainty. And last but not least, financial goals also play an important role. So let's say someone, like a person, is investing for their retirement in 30 years. So they might be willing to take even more risk compared to someone just saving for their short term.
Alright, thank you, Haziq. Those are certainly important factors to consider. Alright, to help our listeners understand this concept more clearly, let's look at a simple real life example. Okay, guys, imagine two university students who each have 10,000 ringgit to invest. Student A place the money in the fixed deposit account while student B invests the money in stock. Alright, for Takib, which student has a higher risk tolerance?
Student B clearly has a higher risk tolerance. This is because stock investments are exposed to market fluctuation and carry a greater possibility of loss. However, they also offer higher potential returns. On the other hand, student A chooses a fixed deposit, which is considered a safer investment with lower returns. This shows how investment choices often reflect a person's level of risk tolerance.
Okay, that's an excellent example and a great illustration of how risk tolerance can influence investment decisions. However, understanding risk tolerance is not just about identifying whether someone is conservative or aggressive. It's also about making financial choice that suit their personal situation. Okay, next, Nurin, why is it important for investors to understand their own risk tolerance?
Understanding risk tolerance helps investors make better financial decisions. For example, if someone with low risk tolerance invests in highly volatile assets, they may panic during market downturns and sell their investments at the wrong time. Similarly, if someone with high risk tolerance only chooses low risk investments, they might miss opportunities to grow their wealth more effectively. By knowing their risk tolerance, investors can build portfolios that match their financial goals, investment horizon, and emotional comfort level.
Alright, thank you, Nurin. It's clear that understanding one's risk tolerance plays a crucial role in making informed investment decisions. But investors are not the only ones who consider risk tolerance when planning investments. Okay, Haziq, do financial advisors also consider risk tolerance when helping clients?
Well, absolutely. So one of the things financial advisors do is that they will assess the client's risk tolerance through a series of questions and discussions. So by doing that, that helps them to recommend more suitable investment products for their client and also for asset allocation. So I give an example, like a conservative investor, they may receive recommendations for bonds and more money market funds, while someone like a aggressive investor, they might be advised to invest more heavily in equities. So that the main point is, the goal is to ensure that the investment strategy aligns with the client's needs and preferences.
Okay, that's a very valuable insight. Thank you, Haziq. As we approach the end of today's discussion, I would like each of our guests to share one piece of advice for our listeners regarding risk tolerance and investing. Alright, Takib, Nurin, and Haziq, what advice would you like to share?
My advice is to understand your own financial goals before making any investment decisions.
Alright, what about Nurin?
So I would recommend that investors avoid following trends blindly. What works for someone else may not be suitable for you.
And Haziq?
So my personal advice is to diversify your investments, because diversification can help reduce overall investment risk. So for example, if you invest in a lot of companies instead of just one, and let's say they are not doing that well and your shares drop, so you will not be affected by that much compared to, let's say, someone who put all of their risk in only one company and that company does horribly, so they will suffer the most losses.
Thank you everyone for the insightful discussion and valuable advice. To conclude, risk tolerance refers to an individual's willingness and ability to take financial risk when making investment decisions. It is influenced by factors such as age, financial situation, investment experience, personality, and financial goals. Understanding your risk tolerance is essential because it helps you make better investment decisions, manage risk effectively, and develop a financial plan that aligns with your personal needs and objectives. We hope today's discussion has given you a clearer understanding of risk tolerance and and its important in financial planning and investing. Thank you for listening to our podcast Sembang Career. We truly appreciate your time and support, and we look forward to having you join us again in our next episode. Until next time, take care, invest wisely, and make informed financial decisions. Goodbye and thank you, everyone.